Thank you. Good morning. My name's Mark Wickersham. I specialise in helping accountants increase their profits. And in this session, I'm going to share with you 3 trends that are changing the way accountants do their pricing. I'm also going to share with you during this session some research from a brand new, the largest research study in the UK accounting in pricing. I'm going to share with you how different firms of accountants price their services so that you can compare how you price to other people and see how you stack up. So that's my brief for the next 30-40 minutes. Just a bit about me first, and if I just tell you a true story. Back on the 18th of May 1996, I travelled from Sheffield on the train down to London to spend a day with Chris Fredrickson on his course How to Set Up a CA Practice. I was thinking about setting my own practice back in 1996, and Chris had such a profound impact on me on the 18th of May that week I then got back to the office, handed my notice in, appointed someone I used to work with as a part-time secretary PA, and on the 31st of May 1996 I started my own accountancy practice. That was a very special day, a day I felt really, really proud, really excited, really looking forward to what the future would bring. I set up an accounting practice because I wanted to be in control of how many hours I worked. I wanted to take time off whenever I wanted. I wanted to go on holiday whenever I wanted. It was an exciting time. Little did I know that the next 2.5 years would be far, far from what I expected. I made so many stupid mistakes in those first 2.5 years. And in the first 2.5 years, didn't make any money at all. I had constant cash flow problems. And then fortunately, in November 1998, I met Steve Pipe, and then in 99 met Paul Dunn, Ron Baker, and Michael Gerber. And what I learned from those 4 gurus completely changed the way I thought about running an accounting firm. And I made some changes that completely transformed my results. And I'll share a bit more of that story later on. But what we're going to cover on our journey together this morning is I'm going to cover 6 key areas. Firstly, I'm going to share with you what are the 3 big trends that are coming out of the surveys that I've carried out. Also, I'm going to share with you why it's getting harder and harder every year to get a good price for what we do. I'll also share with you how firms charge and how much they charge. You can compare what you do with other accountants just like you. I'll also share with you a little known trick that will make your prices seem so much smaller so that you reduce price resistance and get more clients to say yes. I'll also share with you why your single price is always wrong, and I'll wrap up with a pricing system that I'll share, a process that's guaranteed to make you more money, more profits. I've got 2 gifts for you. I've created with Sage a pricing report based on some of the findings from the survey, and you've all got a copy of that. There's no need to read it now, but when you get back to your office, back to your homes, you may want to have a read through that. That builds on the things that I'm talking about in this session. And at the end of this session, I'll also share with you how you can get a free copy of my brand new book, Effective Pricing for Accountants. It's only just come back from the printers this week. It's not yet been this is a pre-publication copy. It will be on Amazon in the next few weeks, but we'll share with you how you can get a free signed copy of this today. So let me tell you a bit about the pricing survey I've done. Over the last couple of months, I've carried out the biggest survey in the UK. 725 accounting firms completed the survey. There were accounting firms just like you. There was nobody in the top 50 or even the top 100 completing the survey. They were normal, typical firms. For example, 32% of the firms in the survey had less than £100,000 worth of fees. 25%, roughly 23% had between 100 and 250, 26% between 250 and 750 of fees, and 19% more than 750, but none of the top 100 firms. So firms just like you were amongst the 725 firms that completed this survey. And in the survey, I looked at, amongst other things, 24 services that we typically offer as accountants. And I asked, how do accountants charge for those services? And also how much, so we can compare prices. And I'll share with you some of the findings for one particular service as we look at the 3 trends. So let's move on to the 3 trends. The first trend that comes across loud and clear from both this survey and other surveys I've carried out is that it's getting harder and harder to get a fair profit and get a fair price. And there's a number of reasons for that, but let me first of all just share with you a couple of survey results. This is actually from a survey I carried out 2 years ago. I looked at, at AVM we do a lot of benchmarking studies, and 2 years ago we carried out a big benchmarking study amongst the profession, and it showed that the average profit per partner in the UK is £68,706, which actually isn't a very good number, because when I also researched partners, when I ask how much do you think you should be paid if you're working at one of the big 5 firms, doing the hours you do now, the level of responsibility, the risk, everybody I ask says more than £70,000. And we all know that in our accounts as sole traders, as sole practitioners, as partnerships, we don't account for a commercial salary for the business owners. And even if we trade as a limited company, we often extract dividends. So our accounts don't show a true economic profit. If we were to put through a commercial salary for what our time is worth, which for most owners agree it's at least £70,000, it means that half of UK firms are actually making a true economic loss, which is scary. When we did the survey 5 years earlier in 2007, the figure was £77,000. Over the 5 years of the recession, average profits per partner have fallen by just over 11%. It's getting harder. In the survey, I asked firms, how would you describe your firm's success with pricing? And it was interesting that 32%, almost a third, said we struggled to get a price that gives us a fair profit. Only 11% could say we usually get prices that give us a big profit. And one of the things that we're finding is that it's getting harder. People are finding it hard to get a price that gives them a fair profit. And there's a number of reasons for that. But I think the single biggest reason, it's a mindset thing up here. We think that clients are price sensitive. And that's the biggest myth that's holding accountants back. Your clients are not price sensitive, I can promise you that. Your clients are value sensitive, and they're two very different things. Behavioural economists have proven over the years that only a small proportion of society are truly price sensitive. And we all know those sorts of people. For example, the little old retired ladies that have time on their hands that meticulously go through the free papers, cutting out the vouchers to save 5p on butter. They're price sensitive. The sorts of people that shop in Poundland and Lidl, they only care about the cheapest price. But let me ask you, who in this room is wearing the cheapest clothes you could find? Who is living in the cheapest house you could find in the cheapest part of town? Who's currently driving the cheapest car? No hands gone. You're not price sensitive, and your clients aren't price sensitive. They're value sensitive, and they're two very different things. Now, doesn't mean that price isn't important. Price is critically important. But the problem is, the reason it's getting harder for us is because we think that clients are price sensitive, and because we think they're price sensitive, we focus on price. We want to make our price seem as small as possible. We keep our prices down. And if every accountant's doing that, we end up with a downward spiral of all accountants reducing prices because they're scared of losing clients and they want to win more clients, and they think the only way to do it is to keep our prices low. That's a recipe for disaster. We need to recognise that people are value sensitive, and therefore we want to focus on adding as much value, making sure they understand the value, which is how we communicate value. And the better we become at that, the more skilled we are at that, the less price becomes an issue. So that's the first trend. The second trend is there's a big, big shift in the way that firms of accountants are pricing. When I entered the profession back in 1988, and when I started my accounting firm in 1996, 8 years later, I believed back then that you had to keep timesheets. I believed you had to bill based on timesheets. And then I met Ron Baker, and he taught me value pricing, and I now realise that time-based billing, the old way of doing things, is commercially stupid. It's been proven it's commercially stupid, and I would go as far as to argue it's actually unethical. And I explain why I think it's unethical in my book, which you can read. So let me share some research from Sage. Back in November 2005, Sage carried out a huge survey of tens of thousands of businesses. And one of the key findings in the Sage survey was that surprise bills are the things that clients hate the most about accountants. That's time-based billing, where we do the job, we then print out the work in progress, we add up the hours, multiply it by some fictional charge-out rate, and then take some random write-off because of our cowardly factor of wanting to not upset the client, and then surprise the bill. Some people call this ambush billing. We surprise the client with a bill they weren't expecting, and they hate that. That's what Sage found in 2005. The great news is the accounting profession is waking up to this gradually. I asked in the survey, how do you charge for incorporating a business? And what I mean by that, just for clarification, I asked, if you have an existing client or prospect you're talking to that currently trades as a sole trader or partnership, and you can identify some benefits, some tax benefits, for example, of transferring to a limited company, how much would you charge for that? But the first question was, how would you charge for that? What basis would you charge? And this is fascinating. You see, only 6% use time-based billing, and that's great news. For some services now, accountants are realizing that the old model of time-based billing, ambush billing as some commentators call it, they are now recognizing that is not an appropriate way of pricing. And it's interesting that 87% are now using fixed pricing. However, here's something that's really important to understand. So I asked people who uses value pricing. Only 7%. And another big myth and a misconception in the profession is, what I've seen over the last 10 years of working with accountants is that many accountants now recognize that time-based billing, the old way of doing things, is inappropriate. And Sage research shows that that's what clients hate. And so they've moved to fixed pricing. Now, in some respects, that's a good thing because it's fairer to the client to tell them right up front what it's going to cost. That's the big problem with time-based billing. It's unfair on the client, and clients hate that. However, fixed pricing and value pricing are two very different things. And accountants need to recognize that they are different, because if you're doing fixed pricing, you are leaving so much money on the table. You're cannibalizing your profits. You see, what these firms are doing, what most firms are doing, is what I call time-based pricing. Now, the difference is time-based billing is when you calculate the price after you've done the work. That was the old way of doing things. We look at the time records, we come up with the price, and we surprise the client. But if you're giving a fixed price that's based on your best guess, your estimate of how long the job's going to take, then whilst it's good news that you're pricing up front and having a conversation with the client and they know what the fee is up front, if it's still based on your best guess at how long the job is going to take, it's time-based pricing, which is only a little step away from time-based billing. It's not value pricing. Now, what are the consequences of this? I asked for this 87% here, which was about 650 firms in the survey, I asked them, how much do you charge for helping a client incorporate from transferring from a sole trader or partnership to a limited company? And this was fascinating. When I asked how much you charge, what was interesting is that one person in the survey, the person who charges the cheapest price, someone charges a fixed price of £20. Now, he doesn't understand the value he gives, and he doesn't understand pricing. That's scary. A full 25% of the survey charged less than £125. Staggering. The median price, or average price, if you like, is £200. That shocks me, because 10 years ago, that was a higher number. Why are the prices coming down? It's because accountants are worried about the fact they think their clients are price sensitive, and we want to try and give them a good deal by focusing on the price side of the equation. That's madness. In fact, 75%, a full 75% of these firms charge less than £300. It's no wonder that accountants are struggling to make the profits they deserve. But what's going on up here? Well, what you might be thinking is someone put an extra naught on by mistake and it should be £500. No, there are actually 20 firms in this category who charge a fixed price of £1,000 or more. They know something a little bit different about pricing, and they're the sorts of firms we need to learn from. So that's the big shift that's taking place in the profession, is that firms have woken up to the fact that time-based billing is completely commercially stupid and unfair on the client, and they're shifting to fixed pricing. But shifting to fixed pricing, whilst it's fair on the client, it's not value pricing. We still have not learned the lessons that Ron Baker started teaching back in the 1990s. What's trend number 3? Trend number 3 is the gap between the most successful firms and the also-ran firms is getting bigger. Let me demonstrate that and show you some of the findings from the survey. For example, I asked the question, how would you describe your knowledge of pricing strategy, psychology, and techniques? And what was interesting was that a full 23%, almost a quarter, admitted that they have little knowledge of price psychology, pricing strategies, price techniques. And I respect those people because at least they're open and honest enough to know and recognize they have little knowledge. 42% say we do things the way we've always done things in the past, but we recognize we need to change. Again, I respect that group of people because at least they've recognized they need to do something a different way. The world's changing. We need to find a different way, a better way. There's 8% who say we do things the way we've always done things and we don't think we need to change. I have a problem with that. That's the ostrich strategy. The world's changing, but I'm going to bury my head in the sand. The world's changing. If we do what we do in the past and keep doing the same things, we won't get the same results in the future. We'll get worse results in the future because the future's changing. We have to change. And 28% say they have a good knowledge, but actually half of those are kidding themselves, as I'll demonstrate soon. So I then asked this question. When you present a price to a client or prospect, do you use the contrast principle? Now, the contrast principle is one of the most powerful tools in our pricing locker that we can use when we're presenting a price. We should be using the contrast principle every single time. It's so powerful. It's one of the laws of influence that Cialdini talks about. And when we use the contrast principle effectively, it helps the clients to see the value of what we do, makes their perception of the price seem smaller, and it takes away price resistance. It makes it much easier for them to buy without worrying about the price. Such a powerful technique when used. And yet what's interesting is 86% of the profession don't use it for pricing. That's madness. Absolute mad. So we have to make sure we understand the pricing techniques and use them. Only 14% do. So in the previous question, when 28% said they have a good knowledge of pricing strategy, psychology, and techniques, if they don't understand the contrast principle, then no, they don't. And that's kind of worrying sometimes when we think we know the answers and we don't. At least these people here know what they don't know and know they need to change and do something different. These people are just in ignorance, are just blindly ignorant. So we have to change. So let me now share with you some thoughts on value pricing and how we can learn from what the small proportion of firms who really have got this sus. It's about 10 to 14% of firms who are getting better results through pricing in a different way. And here's one of the most profound things we have to be aware of when it comes to pricing. There's a concept that economists call price discrimination, and this is so powerful. You see, if you're using fixed pricing, and if you have a single price for any of your products or services, so take for example a tax return. If you have a single price for a tax return, or you might have a single price for acting as the registered office for a client, or for doing a change of company name. If you have a single price, I can guarantee with absolute certainty your single price is the wrong price. You've got the wrong price. And the reason for that is because it's a fact of life that different customers are prepared to pay different amounts. It's what economists call price discrimination. That's what we need to use. You see, for example, if I had on the stage here a 3 Series BMW, and I also asked you all to write down how much you'd be prepared to pay for this 3 Series BMW, I know with certainty that you would all write down a different number. And your clients are no different. So if you did a survey of your clients and said, here's a standard tax return, how much would you be prepared to pay for it? Every client would write down a different number. And this has profound implications for you. So if, for example, you have a single price for doing a tax return of £200, let's say, and you're sat in front of a client or a prospect and you say, my price is £200, the probability of that being the exact price they're willing and able to pay is pretty much zero. The number they've got in mind is going to be either bigger or smaller. If it's a number that's less than £200, then guess what? You lose out because they won't buy from you. Your £200 is more than they're willing to pay. You lose a sale. If, on the other hand, they have a higher number in mind, then the good news is, yes, you'll make a sale, they'll buy, but you're leaving money on the table. So your single price is always wrong. What we need to do is understand price discrimination strategies and involve those every time we present a price. Now, there's lots of things that we could do, and many businesses use price discrimination. For example, people who sell water use price discrimination. They use, for example, one strategy they use is channel pricing. In other words, you can buy this bottle of water, not the Sage one, but perhaps Evian, for example. You could buy it in a supermarket. Or you could go to the cinema, for example, and when you've bought your ticket, you could also buy the same bottle of water. But you know that the price you pay in the cinema is significantly greater, possibly as much as double the price of exactly the same thing in a supermarket. Now, that's a price discrimination strategy. It's called using different channels because they recognize that more price-sensitive people won't pay the cinema prices to buy the bottle of water. They'd rather go out of their way, pop into a supermarket, buy a bottle of water, and take it with them to the cinema. But other people are less price-sensitive and are happy to pay a premium price for the convenience of picking it up at the same time as their theatre tickets, cinema tickets. That is an example of price discrimination. And we need to, as accountants, understand the different price discrimination strategies and implement them and use them because it's so powerful. You can charge double the price for a bottle of water using that strategy. So how can we use it? Well, the most powerful way for accountants, there's lots of ways we can use price discrimination, but the single best way that we can use it is to use what I call menu pricing. Some people call it presenting the client with options. So I'm going to just tell you a little bit of a story about, and share with you the power of this. And thinking about keeping them with a theme of forming limited companies in corporation services. Back in 1996, I started my own accounting firm, as I said, and I made so many mistakes in the first 2.5 years. And I didn't understand pricing at all back then. I came from a tax planning background, so I did a lot of tax work and particularly company formation. So whenever I went to see prospects when I was growing my accounting firm, I would always, whenever it was a sole trader or partnership, I would be looking at opportunities, tax benefits for incorporating. And when I did, I would make sure I highlighted the tax benefits. Then they said, as they quite naturally would, how much will that cost me? And a big mistake I made was then to answer with the price. If anybody ever asks you how much will it cost, the worst thing you can ever do is answer with the price. Because when you answer with just the price, almost every time they will say, oh, that's a bit expensive, that's more than I was expecting. And that's not a price complaint, it's not an objection, it's what I call an imaginary objection. It's a knee-jerk reaction. We feel that when someone gives us a price, we have to say something, we have to respond. We're not going to say, oh, that's really cheap, I thought I'd be paying double that price. No one will say that to you, but very often a natural reaction that we say is, oh, that's more than I was expecting. Because what we haven't done by answering the price in that way, we haven't explained the value and positioned the value properly. So the mistake I made was I would answer that question with between £200 and £250. I gave a vague range because I wasn't confident. I chose that price stupidly because I trained at the largest independent firm in Sheffield, and they typically charge £300 to £350. And I stupidly thought that because I'm a startup with small fixed costs and overheads, I could go in cheaper. Stupid. Small firms that go in cheaper because they've got less costs are stupid. I was stupid. At the end, my cost structure is irrelevant. The value I gave to the clients was exactly the same value I gave when I was working as a manager in a large firm doing the same work as an employee. In fact, the value was greater because they had a more personal relationship with me once I was then an owner of my own practice. So don't let the size of your practice think, oh, I can be cheaper now. So anyway, I used to say it'll be between £200 and £250. And at least half the time they'd say, ouch, that's a bit expensive. And at first I was puzzled. And after 2 years with this, I got angry because I'm thinking, this is cheap. How can they not see it? But I then learned after 2.5 years that I'd made some stupid mistakes. One of the things I changed as part of the system, the process, I learned about menu pricing. And what I then did, and it's interesting, I was charging between 200 and 250, and the research shows now, if you remember, most people, the average price is £200. Prices have gone down in the last 18 years. We have inflation. Why are accountants charging the same prices or even less prices than 10, 15, 20 years ago? It doesn't make any sense whatsoever. It's a problem we have with valuing what we do. So let me share with you the system I did. What I did is I created a system, which was a paper-based system. I had a series of price sheets. This was about a 2 or 3 page sheet, which told them exactly what they get for a 3-star service. And I happened to charge £350. These are the exact sheets I used in 1999. When I put this system in place. But I also offered a 4-star service at £750 with some extra benefits and value. And I charged a premium 5-star service at £1,250. And what was interesting, over the next year or two, I monitored this. And what I found was that 2 things. Firstly, when I presented the price in this way, nobody ever said that's a bit expensive, ever again. I didn't understand why at the time, but nobody did. But the other thing that was fascinating, and I measured this, I noticed that in over half the cases, they chose the £750 middle option. I didn't understand why at the time. Of the other clients that didn't choose that, more chose the expensive one. I didn't sell many of these. I had no idea why at the time. However, I measured it, and a year later, I went back through my invoices, and the average price I was getting for company formation work was £795. It had gone from 200 to 250 up to 795, and all I'd done was do a couple of things, one of which was offer them some choices, creating different options, understanding that different customers pay different prices. I've since found out there's research and evidence, behavioural economists have shown why this works. And when you get your menu right and you get the price points right, the results are quite incredible. And you will find when you get it right that most people choose the middle option. It's a fact of life, and there's some psychology which shows why that works, which I haven't got time to go into now, but trust me, it works. So when you understand this and start to put this in, you can start to get much, much higher prices. Now, I happen to choose, and I was being brave at the time because I'd done some other things to change it, to actually make the entry level higher than what I was charging. But if you're worried about clients being price sensitive, then just simply make this your current price. Because the worst that can happen is the clients, if they're price sensitive, won't leave you, they'll just get what they've always got. But let people choose a different option. Now, I think there's a better way. I think you should put your prices up because research shows most accountants are too cheap. But even if you're scared and worried, at least this strategy gives the client the choice. Systems are critically important. Pricing can change our results, and that's an example of a system. It's a manual system, but it's still a system. Systems are checklists. They're standard forms, they're standard price lists, they're standard letters, they're scripts, the words you use. Systems are so powerful. Systems allow you to embody best practice and deliver the same outcome consistently time over time. I used those same price sheets for 2.5 years when I was for the rest of my time in practice and got extraordinary results because I had a system that worked. Systems are really powerful. Software is a system. So, for example, back in 1988, when I started in the profession, one of the things I used to do then is there was a manual checklist, the Companies Act disclosure. And it was back then there weren't computers, and when a set of accounts was done for a limited company, you'd tick off to make sure you'd done the fixed asset notes right and so on. Now software's got more sophisticated. Sage software does that automatically as part of the software. But nevertheless, the software is a system. So given that pricing can have profound effects on our results, I asked the question, do you use pricing software? And only 15% of firms, this small minority, use software that incorporates all this best practice. Many of the firms in the survey use a tool that AVN created. I wrote this back in 1999. It's for doing company formation work, and you put some data in, it looks at the tax benefits, the pros and cons of incorporating, but more importantly, I built in a few years later, as I refined pricing, a pricing element to it, and it comes up and creates a quote. So we've already looked at 87% of the firms use fixed pricing, 7% use value pricing using software. And I asked how much those 7% of firms charge, and here's the results. And let me go back and compare to the 87%. Remember, the 87%, the average is £200. 3/4 of firms charge less than £300 in this category. Over here, these use their own software they've created. These use Incorporation Tax Planner. I'll just focus on these. Look at this. Those that use Incorporation Tax Planner, I asked what typical price they get. The average price was £1,500 for a company formation. Some firms charge £200 that use fixed pricing. Those that use value pricing on average get £1,500. That's 7.5 times more. Some firms get, on average, £7,500 because these techniques are so powerful. When you understand the contrast principle, menu pricing, when you understand all these things and embody them into best practice, into a piece of software, into a system, you can get some extraordinary results. But it doesn't end there. You see, I mentioned price discrimination, the fact that different customers were willing to pay different prices. One of the fundamental things about value pricing that you absolutely must grasp, and giving a fixed price sheet doesn't get this, with value pricing, you have to value the customer, value price the customer, not the product. Because everybody values things differently, you have to have a conversation with the client to find out what they value and give them a unique price for them. That's how you master value pricing, by having a system, a pricing system, where you price the client. Every client will ever get a different price as a result of that. This is why I think that those accounting firms who are now starting to put fixed prices and menus on their website, that's just stupidity. That will encourage price shoppers. That's madness. For value pricing to work, you must have a conversation with the client. You need to understand what drives value for them. And it's different for different clients. For some clients, they'll really value you turning their accounts around within 30 days. That's really important. Some won't care. If that client wants 30-day turnaround, give them that, but charge a premium price for it and have a system for doing that. And if they value it, they'll pay the premium price. We have to understand what's important to each and individual client and prospect. Now, what happens then when firms use software? I asked them, in the first question was, how much do you on average get when you use software, which is the last graph. I then asked, what's the best result you've got in this area? And look at this. Here's the average for the people using fixed pricing, the 87% of people. Look at this. Using Incorporation Tax Planner, they get their best results they've got are in half the cases are more than £8,000. Some people are getting these sorts of fees, tens of thousands of pounds, for doing what some firms are charging £200 for. And it's the power of using price psychology, price systems, pricing techniques. When you understand them and understand that your clients are not price sensitive, they're value sensitive. But the trouble is, most of your clients don't understand what you do, because as accountants, and I was bad at this, we're poor at communicating value. They don't understand the value in a set of accounts. We need to learn how to communicate value. For example, when you do a set of accounts, one of the things you do is reconcile the VAT returns, don't you? To make sure that the VAT control account balances, that the VAT credit is correct, and so on. Do you tell the client that as part of the fee proposal? That's one of the things you do. More important, do you explain the value? Because they don't understand that. What's the benefit of that to the client? Well, there's lots of benefits, aren't there, of doing that? The benefits might include, for example, we'll make sure you've claimed every penny of input VAT you're entitled to. We'll also make sure you've not overpaid any output VAT and paid too much. We'll also make sure you've paid the correct amount of VAT so you can sleep at night, because you won't get penalties and interest if you ever get a visit from HM Revenue customers and customs. They're the sorts of benefits of just that small little part of doing a set of accounts. But I've never come across an accountant that explains that to the client. If the clients don't understand what we do and don't understand the value, then they're going to be pushing down on price. We have to become better at explaining what we do. In a second, I'll share with you how you can get a free copy of the book. I'm around if you've got any questions, but for now, thank you so much for listening. My name's Mark Wickersham, and you've been a great audience. Thank you.
Thank you very much, Mark.
Thank you.